5 best Vanguard index funds to buy and hold forever. So here's the deal. I'll break down how much you and Karen could rake in from a $110,000 investment in different index funds. Ultimately, I'll introduce you to an ETF that could potentially turn $10,000 into a whopping portfolio value of close to $2 million. Whether you're eyeing that $1 million retirement fund or gunning for financial independence, if you're after investments with serious growth potential over the long haul but don't know where to begin, I've got your back. In this video, I'll spill the beans on 5 Vanguard index funds that could help you hit those big financial goals. And let me tell ya, ETFs, they're like the Swiss Army knives of investing. You can buy and sell them like individual stocks, yet they expose you to whatever market sectors or investment styles you're into. Plus, there are ETFs out there that mirror the broader market's returns, so you can essentially own a piece of the S&P 500 with just one click. So stick around till the end. Alright, let's kick off with number 5, the Vanguard Mega Cap Index Fund ETF, also known by its ticker symbol MGC. This one's Karen's top pick of the year. At first glance, its current dividend yield of 1.32% might not turn heads. But hold on, there's more to it. For the long haul, you've got to consider a bunch of factors, like its sweet dividend growth rate of 6.89% and a solid average yearly yield of 10.9%. So, how do we crunch the numbers? Well, we're breaking out our trusty JMA calculator. This little guy takes your initial investment, factors in the average annual share price gain, adds in the dividends, and voila, spits out your year-end new balance. Rinse and repeat each year, adjusting for that growing dividend rate. Now let's talk about projections. If Karen throws $10,000 into this ETF after just 1 year, it's looking at $10,122. Fast forward a decade, and that same investment could nearly triple to $33,170. And by the time 30 years roll around, Karen's initial $10,000 could balloon to a whopping $274,600, with dividends chipping in $113,173. Now let's unpack this ETF's game plan. It's all about big American companies, each worth over $10 billion. Think stable and low risk. The bulk of its investments are in tech giants like Apple and Microsoft, which account for about 28% of its holdings. It also dabbles in healthcare and financials. The top 10 companies it's invested in make up nearly 30% of its portfolio. And hey, it's got a tip-ranked SMART score of 8 and a seeking alpha rating of buy, which basically means it's expected to rake in cash, manage costs well, and has been on a winning streak lately. Moving on to number 4, the Vanguard S&P 500 Growth Index Fund ETF, aka VOOG. Now, this one's got a modest current dividend yield of 0.9%, but don't let that fool you. It's on a steady climb, increasing by 7.5% every year, aka its compound annual growth rate or CAGR. But here's the kicker. If you're in it for the long haul and looking to see your money grow, this ETF's got your back. On average, the value of the stocks it holds jumps by around 12.76% each year. Let's break it down. In the first year, Karen's stash is projected to hit $1,366. Fast forward a decade, and that same investment could nearly triple to $35,790. But here's where the real magic happens. After 20 years, Karen's looking at a cool $241,445. And if she waits it out for 30 years, her initial investment could balloon to an impressive $414,000 to an impressive $414,992, with dividends kicking in $689 annually, or about $57 a month. That's not too shabby. This ETF could potentially add $44,471 to Karen's initial investment, with the bulk coming from VOOG's growth and a bit from dividends. Now these returns are solid, but hold on to your hats, because there are even juicier ETFs coming up. So, what's VOOG's game plan? Think of it as a slice of the S&P 500 index, focusing on companies primed for serious growth, especially in tech. About 31% of its cash is poured into tech companies, which have been killing it lately with their promising future earnings. But it's not all about tech. VOOG also dips its toes into consumer and communication companies that are outperforming the broader market. Plus, it won't break the bank to invest in VOOG, with just a 0.1% expense ratio. And since it's a hot commodity on the stock market, buying and selling whenever you please is a breeze. Now at number 3, we've got the Vanguard Growth Index Fund ETF, known by its ticker symbol VUG. This ETF boasts a current dividend yield of 0.55%, which might seem a bit modest. But hold tight, because it's got a solid dividend growth rate of 4.74%. Plus, its share price tends to climb at an average rate of around 13.64%. Crunching those numbers, if John tosses $110,000 into this ETF, after just 1 year, it could swell to $1,419. Fast forward a decade, and that same investment might triple to $37,076. Let it marinate for another decade, and in 30 years, John's initial investment could skyrocket to a hefty sum. Plus, he'll be pocketing $158 in dividends annually, which breaks down to about $13 a month. This ETF packs serious potential, potentially adding a whopping $477,500 to John's initial investment. With over $26 billion in assets under management, VUG's game plan is to target big American companies poised for growth, especially in the tech sector. Alright, let's wrap it up with a big finale. But before we dive into the last one, let's check out number 2 on our list, the Vanguard Russell 1000 Growth Index Fund ETF, known as VNG. Now this ETF rocks a current dividend yield of 0.69%, which ain't too shabby. And it's got a decent 10-year compound annual growth rate or CAGR of 7.65%. But what makes it shine is its focus on long-term growth through stock appreciation. With an average annual stock appreciation rate of 14.27%, this ETF means business. If John throws $110,000 into it, after 1 year, it could hit $1,496. Fast forward a decade, and that investment could quadruple to $39,600. And after 20 years, we're talking about a whopping $153,674. Plus, he'd be pocketing $356 in dividends annually. In total, this ETF has the potential to add $577,500 to John's initial investment, with a chunk coming from dividends. Known for its low fees of just 0.08%, VNG has a knack for outperforming the S&P 500 index, thanks to its heavy investments in growth stocks, especially in tech. With a diverse portfolio of 443 different stocks, including big hitters like Apple and Microsoft, VNG is a top choice if you're banking on the growth of American companies, especially in the tech realm. And now, the moment we've been waiting for. The number 1 spot goes to the Vanguard Information Technology Index Fund ETF, known as VGT. This ETF is a tech lover's dream, delivering a strong return of around 30% over the last year. But what sets it apart? VGT follows the MSCI US Investable Market Information Technology 2550 Index, investing in a wide array of American tech companies, regardless of their size. With a track record spanning over 22 years and managing over $57 billion in assets, VGT is as stable as it comes. And when it comes to performance, it consistently outshines the competition. Over the last 10 years, it's averaged a stellar 18.58% return annually, trumping other popular choices like XLK, SEG, and QQQ. With a current dividend yield of 0.73%, don't be fooled by its modesty. Its high dividend growth rate, coupled with an average annual share price growth of 18.58%, means big things for your portfolio. If John throws $10,000 into this ETF, after 1 year, it could hit $1,931. Fast forward a decade, and that investment could quintuple to $57,843. And after 20 years, we're talking about a jaw-dropping $328,500. Plus, he'd be pocketing $3,249 in dividends annually. In total, this ETF has the potential to add $1 million and $835,183 to John's initial investment, with a big chunk coming from dividends. So while turning a $10,000 investment into over $1.8 million might sound like a pipe dream, the math checks out. The key? Reinvest those dividends, with reinvested dividends growing at 14.36% annually, backed by massive share price appreciation. The results speak for themselves. And that's a wrap on Vanguard ETFs.